Ladies and gentlemen of the crypto space, we're live on a Friday, April 11th at 11:36 a.m. So we've been at this for a couple of years. The reality is it was almost all noise as long as the very three fundamental rules are followed. Rule number one, own more assets. Rule number two, know when to stop buying assets. And rule number three, the qualification for assets, fuck you, pay me. So we've had how many years since 2022 with the blow off top in the dollar? It's going on three and change. So we've had three and change years to one, rule number one, own more assets. Potentially, depending on your situation, your portfolio construction, capital availability, maybe you hit rule number two, know when to stop buying assets. At some point, you got to stop buying assets cyclically. You don't want to buy too much of a premium. You want to make sure you buy at a discount. But obviously, if your portfolio is light on assets, maybe you didn't realize that owning assets was a good thing until 24. So maybe you don't have enough assets and you could justify buying at a bit of a premium. Always remember, you never know what the premium and discount are. You know relatively. Obviously, if something's up 200% off the bottom, at a bit of a premium. So, but that premium may be relative because if it goes another 200%, it turns into a relative discount. So it's not so easy to find the discount of the premium. The point of the rules isn't to tell you with certainty the things to do, when to do them, at what price points to do them at. The point of the rules are guidelines for folks to have in the back of their mind overarching principles to peer through the absolute bullshit that is regurgitated on social media. And oh my, there's a whole lot of bullshit regurgitated on social media. So here's your signal for the day. Gold is parabolic. Ben popping some great macro takes. I retweeted his most recent post. It's a great take. He summed it up pretty nicely. We're in at least a cyclical regime change. The structure of the system is changing. And what Ben says is, and another say, and basically everyone says the same story. So the yuan was at its threshold, and that's no good. So they have asked their banks to stop buying dollars, which introduces a complexity. Clearly, they have dollar debts. So how do they pay their dollar debts if they can't buy dollars using washing machines or buy dollars using yuan currency units? So that's not necessarily for us to answer. That's for their banking system and their financial regulators to answer. But what we see is the effect. Clearly, if they've stopped buying dollars and they've started purchasing euros or yen or what have you, because maybe they're restructuring their trade as well, that takes the pressure off the dollar. And that changes the whole situation for the planet, particularly because of the composition of global debt and the amount of dollars that every country needs every year merely just to pay the interest on their existing debt. And that's not considering newly issued dollar debt, which is inevitable aside from refinancing requirements. You got to refinance existing dollar debt, and you're probably going to tack on another 5% here and there because that's what everyone does. And they do it in every denomination. It just so happens that they do it predominantly in dollar format. So that's where we're at. It looks like we're on the verge of the cyclicality we've discussed from a DXY perspective for quite some time. From a weekly perspective, so you got to zoom in a little bit, but I prefer to zoom in on a relatively high time frame perspective. So from a weekly perspective, we did punch a fresh lower low on the DXY And that takes us back to April of 2022. And obviously, in April 22, this thing was going parabolic. And now we've been trying to break back down. So, this is the first meaningful punch of the weekly 200 SMA for the DXY since July of 2020. Now, 2020 was an interesting time period as a relatively good time period for emerging markets. In particular, the emerging market that we have the most interest in, the crypto markets. So you're clearly going to have your short-term cyclicality, your short-term volatility, but it looks like this is a pretty meaningful punch of the 200 SMA, which indicates a structural breach, a structural trend change, a structural change in capital flows. So that means in time, into the short to mid-term, how currency flows between countries and what kind of currency units are purchased rather than sold uh, will change. And we're seeing that play out right now in real time. Now, obviously, you have the other components of economics, and we have domestic fiscal responsibility, and that's pretty complicated this morning with the 10-year at 4.5. And what was the 30-year at? Wasn't it approaching 5 as folks were talking about? We'll see in a second. Holy crap, it passed 5. 5.01%. This looks like one heck of a line in the sand. I mean, and I don't think the United States really wants to refinance their $7 trillion this year at 5%. Oh my God, that's a massive, massive number. So they probably want to refinance lower. So how do they get to that policy objective is an interesting conversation. Doesn't really matter much to us that the takeaway is that they're going to execute administrative and policy measures to attempt to better their refinancing capacity. And the 7 trillion that they need to refinance is completely in addition to additional deficit spending. So there's the borrowing. We have a capacity to service the debt for the time being. Can kick down the road, but we're seeing a structural trend change in the nature of capital flows, at least for the short term. How do we know that? Because in the history of finance, one, cycles will cycle. That's not even the history of finance, that's the history of nature itself. But we've seen what happens when you get your dollar depreciation, your first leg breaching a significant trend level, significant moving average. You get your downward move, you get your upward move, then you get your push lower significantly. And as the rest of the financial system starts to process and digest this structural cyclical trend change, you get the emerging market cycle. And that is probably, most likely, quite considerably what we shall see yet again for what we look at in the crypto markets. This time is different, though. It's not different, it's different. That's horrible terminologies that get thrown around way too easily. It's not different, it's different. It'll drive you freaking nuts. It's not different because we're dealing with currency units, we're dealing with debt, we're dealing with interest rates. It's all the same story. But what is different? There's always something that's different, and there's always a whole bunch of shit that's the same. What's different is the biggest takeaway. 2019 onward. 2019 onward in crypto markets, there is an emerging market of an actual market of fintech businesses that have revenue and cash flow and actual dollar liquidity and dollar supply. This didn't exist prior to 2019. It's all brand spanking new. You can't lump the concept of crypto and prices of tokens into some overarching way to inspect what's going on economically and financially. That's just not the case. There's an actual churn, there's an actual velocity of money in these crypto markets. There's interest rates, there's leverage and debt. And as I define it, the 5 businesses of crypto and foreign exchange is at the very low level. And that's the exchange of one denomination to another, an Ethereum to a Bitcoin to USDC, USDC to Solana. It's all foreign exchange. So these types of businesses did not exist prior to 2020. It was less than $1 million on Uniswap V1. And to this day, I remember when Curve broke $1 million intraday volume. I remember the first mints of Ren BTC on Curve. And that was crazy because that started early. That was summer of what? Summer of 2020. And this was pre CRV. CRV didn't exist yet. The DAO didn't exist. So those were the early days, and there was earlier user interfaces as well. It's a very interesting journey, end of 2019 into mid 2020, a rather rapid pace of escalation. It happened so quickly. Just millions and millions of dollars started flooding in. I mean, some of the you could probably dig up some old Twitter posts dealing with, oh my God, Curve just breached $10 million in volume. It was like, holy crap. It was absolutely wild to see. And now we have some volumes that are quite fascinating. $305 million casually on a daily basis. And Uniswap's been in the billions for quite some time. And this is obviously on all networks. And there's plenty of markets that have come into popularity since 364 mil on Fluid. Aerodrome, I don't understand why Aerodrome lists on this page underneath Uniswap. Maybe that's cumulative. It doesn't really make too much sense to me because Aerodrome has obviously topped Uniswap from a base standpoint, and also Velodrome has topped Uniswap from an optimism standpoint. So this is a bit of an I don't understand it too much. No, so imagine in 2020 thinking about what that Pendle would come online. The concept of these rich, robust derivatives. Absolutely wild to think about. Um, who's here? 1 second. Someone's at the door. Yeah, no, no biggie. Anywho, so what has developed in these markets is just extraordinary, and that's the perspective that especially new entrants will lack. Just trying to figure out, oh, what price is a token, and is it a cheap token price? And they're like, oh, but the market cap. Oh, but the fully diluted value. Oh, it's in the billions. Uh, just fun memories of like Coin Market Cap and top 10 and the structure of the system. There was no system pre 2020. There was nothing. There was token price and the Bitcoin narrative, which remains pretty much the same thing till this day, and it's as strong as ever. The Ethereum narrative has shifted significantly with more recent price action, but that's also mostly noise, as I define it. Um, Solana came online. Damn, you remember the first Phantom days? Did you guys know that Curve was the first chain other than Mainnet was Phantom? And there was no bridging. There was none of this for you veterans nowadays, thinking in terms of the new folks are like, oh, bridging, what are these different chains? But nowadays it's works. You can just bridge using many different providers that are quite established at this point, to the point where we have aggregators of cross-chain infrastructure. That's crazy. Back in the day, we used to bridge, and it's like, are we going to get our money? Is it going to actually work? And that's just not the case anymore. Now there's so much infrastructure. So if we experience anything comparable to what we experienced in 2020 and 2021, dare we talk about 16 and 17, which is very clear on the chart. It's going to be quite different this time. With the capacity for currency units, the flow across chains, it's just going to be weird. It was friction. back then. Not only was there friction, the instability in 2020, the amount of hacks left, right, up, and down. It was just explosion after explosion, week after week. I can't believe we lived through that. But it was all noise in the end, not for the people that lost their capital, but in reality, what happened was the emergence of protocols, businesses that survived, that proved themselves, that proved their resilience and reliability, creating lendiness. Their trust has increased over these years. So now billions could flow into these relatively trustworthy protocols. That's exactly what happened to Aave. What's Aave sitting at? Like 30 bill? 36? Or it's got to be used at this point. I'm just curious. Let's see it. 25, 30 bill. 2588. Oh my goodness. $201 billion in volume over the last 30 days. Average interest rate of 6%. I can't. This is so beautiful. Well, wasn't it talked about recently by some folks that if measured by deposits, Aave is like the 14th largest bank in the United States? So that's what folks don't understand. It's nice to see 162 million go. Love this presentation because it's a bank. Might not be a traditional bank, but a bank's a bank, even if people don't call it a bank, because it's providing banking services, banking infrastructure. This is beautiful. Lovely website. Anyway, it's just exciting because imagine turning on 2020 with this kind of environment. So that's why we've spent the last couple of years looking for what conditions would allow for increased financial activity. And the conditions were pretty simple, at least from my standpoint. And we go into great detail, maybe unnecessary detail in many regards, but the conditions were right there in the guppies on the weekly for the DXY. So we just click some gray guppies for the first time in a bit. Um, Gray guppies over a period of time, the averages pick up, and you finally get the red guppies. That's going to take some time. That's going to take weeks. So right now, everyone's like, no, this is the fear and doubt part of the market where people are like, no way, the whole world's going to collapse. And, the swap spreads, and the basis trade, and the trade war, and the tariffs, and it drives people mad. Meanwhile, you got your signal, which is gold. Holy crap. Top. It's just literally getting bid straight up. This is a vertical chart for gold. It doesn't move like crypto. That's expected. It's a massive and traditional type of instrument, but 2% on the daily is a wild thing to see, especially after these continuous and repeated parabolic moves. Absolutely stunning. The fact that oil's down at 60, I mean, literally, you're going to see gas prices just fall through the floor as these prices trickle into supply, into gas inventory. It's going to go the way of eggs, and you're going to get half price gas at some point. Curve back at 60 cents, 61 cents. Let's take a look at the structure a little bit. A lot of opinions floating around, but not a lot of reasonableness. So what do we have? We have the hat stays on with whiff for how many months? The smile stays on. From a technical structure pattern, it's an inverted head and shoulders, which basically is an expression of it's likely to be a bottoming structure. Now, this bottoming structure goes back to April of 2024, which is literally a 1 year bottoming structure. So I did say, if you zoom out on the DXY, we go back to September of 22 was basically as bad as it got in 22. And that was literally tick bottom for Bitcoin. But it took years. It has taken years for these market conditions to become favorable again, for the emerging cycle to play out and crypto to do what is it is well known for. It took so many years, in fact, that we are still at rock bottom prices on crypto fintech because crypto fintech is not Bitcoin. Bitcoin is a different narrative. Fintech is a currency narrative or an economics narrative, but a modern business narrative, a fintech narrative. The concept of foreign exchange, credit, derivatives, liability, printing, and liquidity financing, the preferred B2B product of the crypto space. So these products, this type of market will not respond the same way Bitcoin has over the last, frankly, 3 years since 22. The bottom for Bitcoin at 16K, it fits a different narrative. And that's okay. It's okay for things to be different. And it's not okay to lump all this shit under the same umbrella. Crypto, ooh, altcoins, meme coins, NFTs, these are all different stories. And it's imperative to understand the context of the story and what it means, because these are all critical components of the process of investing. There's a couple of fundamental rules. Never invest in what you don't understand. That's a big rule. I shared some clips over the last couple of days about, well, with Charlie Munger, who was a lovely, wonderful, brilliant, historic investor. He said he wasn't a good seller. All right. Maybe I got some insight from that mentality and methodology that went into my three rules. Three very simple, fundamental rules. If you're just jumping online, those three rules are like literally the first couple of words I said for the stream. Um, Bitcoin price. Look at that. The Bitcoin price didn't even get to the bottom of the weekly guppies on this mid-cycle break, 20, 30%, give or take. Didn't even hit the bottom of the guppies. Got hit the bottom of the guppies back here in August of 24. That was a nice clean wick right to the bottom of the weekly guppies, but not here. Now we're nicely off the bottom, 72, and we're at 82, 10K off the bottom. You see, for me, the Bitcoin price is noise. For me, even more so, the Ethereum price is noise because I don't really own Ethereum. Ethereum is what you own when you want to engage in transactions. It's for gas fees. And I have repeatedly told folks I define the cash part of the portfolio as stablecoins and Bitcoin. Very simple. Keep it simple. Investments produce cash, even more simple. Let's go back to the DXY. Let's go a little intraday for the fun of it. We don't really do that much around these parts. Not much to take away. Look at the MAs. Let's turn off the guppies and put on more MAs. Oop, oop. I mean, literally got to go to the hourly. That's how ferocious the down trend on the DXY has been. Just ferocious selling. What we're at the 1 hour 10 SMA. I mean, you're not going to get it too much constructive inspection looking at the 1 hour 10 SMA. I mean, look how departed. If we put on Bollinger Bands, I'm sure this thing is divergent in so many ways. So what we're looking for, and this is fascinating because it's so obvious. What we're looking for, being that it's Friday, is a close of this candle below the weekly 200, which is this fat red line. Now, what's the odds that you gain 106? If you gain over 2 points before the end of the day, and it's 12 noon, that would be wild to see. It'd be extraordinary volatility. So there's so many components that still need to come into play for there to be increasingly favorable conditions. What we got is the early folks that are starting to restructure their capital into this emerging market. Things will move off the bottom much more quickly as we finally get stabilization of 10-year yields. This is pretty bad. I mean, this is a line in the sand in so many regards. You're looking at the 30-year at 5%, spike above 5%, and the 10 years at 4.5. So there's been some significant selling of long duration treasury instruments outside the US. So this is going to play into QT. certainly going to play into QT. It's going to play into basically the whole conversation that the Fed has and what Treasury has. That's what they're all talking about right now. Interest rates spiked, given what the stock market did the last couple of days. Yet we had an interest rate spike. That's counterintuitive according to traditional modeling. When the markets collapse, the equity markets collapse, you have a rush for safety, which traditionally is treasury instruments. That clearly did not occur, at least in aggregate, maybe at the margins, but the overall market has grown so large with the amount of debt outstanding that internationally, maybe the selling overcame all that risk off behavior internally, internal to the United States. So there's some additional factors in play, um, and we may be seeing a shift, a shift from treasuries being risk off to being a different type of risk, which has been argued to a great extent, given the overall depth of U.S. debt is becoming riskier. So therefore, people are expecting a higher interest rate to take on that risk. Anywho, from a technical standpoint, that is what I've been looking at. Let's go to not fees and revenue, uh, volumes. Yeah, volumes. No, I was looking at obviously stable coins. That's probably just the most important takeaway, as always, with a bit of a rolling top in stable coins. So we've had a nice appreciation off the bottom. A lot of things are up 200%, curves up 200 plus percent off the bottom, amongst so many others, including the meme coins are starting to catch a little bit of bid, but who gives a crap about that garbage? But you'll probably see in the coming days either a big snap to the upside in dollar supply, stablecoin supply, or maybe the rolling top plays out and things get a little bit lackluster. So people are like, big pop at the bottom. Is it going to continue or is it going to roll over? So we're still in that disbelief stage. So what we're looking for continuation is a follow through on dollar supply. Get that big pop to the upside, and that is a clear indication of game on. Anyway, that's what we look for from an on-chain data standpoint. At least that's what I look for. That brings me a great deal of comfort. It all doesn't matter according to my rules. Or more assets. It has nothing to do with any of the shit that's going on. I look at all this shit that's going on, just one, to pass the time. Two, it's important to understand the market in which you are investing. And three, it brings me comfort because when I understand things, I'm like, all right, nothing's a mystery. Nothing's like, oh, why is this happening? It alleviates fear, uncertainty, and doubt. If you're on X or on YouTube, please feel welcome to ask any questions. More than happy to answer anything on people's minds. Critical Mass in the house, here, present, and accounted for. Rob Epic, thank you. Appreciate it. Sergio, present. Dean, hey Cap, good morning. Fugu, good morning, good morning. Peter, hey Cap. George is in the house. Um, we could take a look at curve supply for the fun of it, CRV USD supply. That's always interesting. Obviously with resupply, this thing has been cooking. $124 million of CRV USD. And it's not even a bubbly market. There isn't any exuberance. All di- Everyone is disenchanted. Everyone is they don't believe it. And obviously after all these years and all the capital losses from meme coins, people don't even have the same amount of capital. So it's going to take a little bit of time for things to get into gear with regard to capital inflows. But the fact that this is the base, 124 mil, that's insane. This didn't exist. The concept of this didn't exist. What Mitch created is just a breathtaking piece of technology and an awe-inspiring financial primitive, a currency unit that is all on chain. It's not, it's all the on chain oracles that they built through the Curve platform. It's not dependent on external. It's literally this self-contained. I have grown very fond of modularized components as I build software nowadays, and that's kind of what's implemented here is the self-contained entity that has a lack or an absence of dependence on outside information. That is wild, and that is resilient, and that is great tech. And it's just like being early is indistinguishable often from being wrong. Great tech isn't always the greatest investment, but just how being early may actually prove to be right. Great tech not being a great investment may actually turn out to be a great investment. There's no way to know. You'll only know in hindsight when you got 2020 vision, 2020 hindsight. You know what I'm saying. Do you think Frax has any chance of becoming a fully integrated worldwide used stablecoin? I don't know, but I will want to be out of that. I would want to have exposure to that if that plays out, unless I retain my original position from whenever the hell it launched in late 2020, 21. I don't know when Frax launched at this point. All I know is I've seen Frax at $40, and I've seen it where it is today. And great tech isn't always the greatest investment until it potentially becomes the greatest investment. But there's your speculative requirement in engaging with investing. So what does that mean? You manage your risk with position size, smaller positions, and you always have, in my opinion, an outsized position. You always pick the big winner, and that's a lesson I've come to understand from the likes of Buffett and Munger. You make your big bet, and then you have your outsized bets, and then you have your marginal bets. The whole 1% to 10% changes everything kind of narrative. At least that's how I've executed over the years and the stories that I've told. A student's in the house. Hope you're well. Yes, indeedy. The advisor in the house. Good morning. Cap, I understand Frax hopes to compete with Circle and Tether from their new VP appointment. Yeah, that is quite interesting, that news lately. I have my ears peaked, and I am certainly like, whoa. It's always been one of the biggest narratives in the crypto space, what Sam and team have built and are building, and what Frax is conceptually, technologically. What an extraordinary product and service. It doesn't comply with rule number 3, so that implies it's not the best investment. But how do you measure current cash flow requirements versus speculative future cash flow requirements? I mean, maybe rule number 3 could be expanded a bit. Fuck, you pay me, but I understand you're not paying me now, but you're set up and configured to literally pay me in the future. And we've known for a long time that Frax, all capital, all revenues get concentrated to their governance and then get distributed in, like the partnership type of structures I've talked about lately. So it is certainly set up to comply with rule number 3 in the future. Chemistry guy, good morning, Cap. Love your context. I've learned so much. I'm very happy that my stories can help folks. Obviously, I tell them and have told them so many times over, but they have become clearer and more easier to tell and more easier for even myself to understand. So I appreciate your appreciation. The advisor, also any thoughts on build? They're going to try and compete in this niche. I would imagine there's going to be a lot of competition. I would imagine there's a lot of debt that needs to be issued. And I would imagine the stablecoin space is a highly likely candidate to purchase that debt and convert it into dollar liabilities. Stablecoins, which are dollars, structurally and mechanically equivalent to dollar deposits in the bank account, great. So they're dollars. I mean, stablecoins allow long-term government debt to be turned into currency. It's basically what it is from a technology standpoint. So I would expect a lot of competition into the future. Joe Pappas in the house. Hope you're well. Been a long time. How's the curve position? Curve looks lovely right about now. If we zoom out, we have very nice inverted head and shoulders on the bottom, and this is a 1 year structure. It's not a short-term structure. So bottoming pattern's great pattern, and up from here, up, down, up. It's going to be volatile. Everything's going to always be volatile. Every asset on the planet is volatile. But what matters is not lower lows, is it bottom? And then you have folks that do their technicals and their Elliott wave to say, all right, next stop, a breach of the 200 SMA. You get to a decent level like 129 or the green line up there at 158. And then you get a whole bunch of consolidation. Maybe you get a back test and a retest of the 200 SMA on the weekly. It goes to like a buck 80 and a blow off top, and then it regresses to a buck 20, and then it stabilizes. Maybe get a big wick down to one and scares the crap out of everyone. And then at some point, this will be interesting when we get back to these types of levels, 270s to threes. I don't know. That is a massive void between the level where we're at, the 158, and the 372, because it came down so quick. There was just so much supply that needed to get offloaded into a relatively thin illiquid market. So this is the void right here, as I put it on chart form, 372 to a buck 58, where there's going to be a whole lot of decisions made on what kind of price points are meaningful. And ultimately, the market will tell us what price points are meaningful. Nice to see spell back above 6155. I look forward to seeing what they put up for their rentals this week because they don't have them up yet. But resupply is up there with 24K at about 14.52%, which is pretty nice to see. These are nice numbers. These are relatively big numbers. You gotta sort by weekly rewards to really get a sense of what hey, look, F and OF. Look at that, 3.62. So resupply is really dominating right about now. This is nice. Super OF, some sort of derivative on base, popping in $11,500. Curve, no less. I prefer stable coins, but we don't usually get those from vote rentals. Look at that. Interesting. CRV USD, couple $100 for convergence. JPY, that's interesting. 8%, $700. All right, small actors could certainly engage with these types of rentals. Get 8% of the money, as long as you don't over dilute. That's a nice source of vote rental flows, which is obviously a component of overall flows from Curve. And then you go over here and you can see stuff like, obviously we could look at MyLog, 1.99. So if you got 8% revenues from vote rentals and 2% on base CRV, VCRV, that's a nice solid 10%, but 14% plus 2%, it's all additive. 16% is a hell of a cash flow stream, in my opinion. Couple of bucks. Peter threw some capital in FX USD. Let me go back here. Let's go back to something while we talk. Stable pool. I like that there's no counterparty to traders, but real yield from exposition. Listen, Aladdin products are probably one of the most interesting derivative in crypto markets, and certainly the most underappreciated derivative in the entire crypto space. It has so much depth to it and richness. It's like urine vibes for all the derivatives they made. Now, bear in mind, derivatives are complicated. They're not really understood. So that's partially why I don't really own any derivatives, not even like CVX CRV or YCRV. I don't buy derivatives. I don't need the complexity. I want the simplicity. I was always a base layer maximalist, as many folks would describe my tendencies and behaviors. But I have always had a high opinion of Aladdin DAO team and products. The advisor, Cap, unrelated question, if I may. Heard of IFTTT service to automate stuff? Is it reliable? What is that? Uh, what do they speculate? That you'll eventually have crypto involved in this and micropayments between different products? I don't know. Automation. Listen, you get a bunch of automated light switch, automated door locks, and call it a day, even though there's security concerns from the door lock perspective. But automation, what? I don't want a damn refrigerator showing a big screen for trading view. That was always such a gimmicky thing. So automation goes so far. All right, fine. Automation with robotics. Now we're talking. If I could get a robot to do my laundry and fold my laundry, okay, now the world has changed. Peter, yeah, I think Frax needs to engage an engaged market to pay well. The more rational, intelligent actors enter the crypto will do better. Yeah, at some point, my opinion is you get big, large institutional players that end up adopting these systems and they realize they can't buy them because they're not a company to be bought. So literally the only engagement they can do is purchase the tokens from the open market to gain governance control. Um, there's no other way. So there's no hostile takeovers in the traditional sense where retail equity shareholders can get pushed out or forced out. Um, basically, if you ever had that type of situation play out in crypto, the retail folks literally just get monetized, which is a big deal. They get everything they own goes up in price. Excuse me. The advisor are familiar with Frankencoin. Yeah, I like them very much. I'm I'm a fan of dollars, but I appreciate foreign currencies and how they fit into the overall nature of foreign exchange and our currency markets globally. Now, obviously, wherever you are, you're going to need your respective currency unit. Now, the reason I am interested in dollars is because I have to pay bills in dollars and I have to buy things in stores that are priced in dollars. If you're in the euro area and you need euros, you get your freaking euros. So that how does that fold into what we talk about? We're not saving in euros. We're accumulating euros and we have a capacity to do things with euros. It's it's like potential energy, if that's even a decent comparison. You could do things with currency units. All right, you could invest if you want. You could pay bills if you want, or you could go to the grocery store and check out, and if you want, put these currency units on a debit card. So that's my 2 cents on currency units, and I think you'll eventually see stable coins in every country because just you need your denomination, your accepted denomination, to make payments in your respective country. IFTTT works well, but I use it for a Twitter bot I run. Interesting stuff. Not familiar with, but obviously 81 bomb AI art. Check it out, guys. I tried my best with some automation on X. It didn't stick. Nobody gave a crap. I thought Agent Rational was very rational, but I guess most people didn't really care at the time. Um, but automation is a big part of where society's heading. How it plays out, how it fleshes out, we don't really have the ultimate clear picture. I'm sure we'll have a much better picture of where things are heading in 10 to 20 years. Mix, they have been around since Web 2, like Buffer, now integrating the shortcuts. Yeah, anywho, 102.77 on the DXY. Boom, 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 IFTTT stuff. Okay, so obviously DXY is getting bid a little bit, and I keep an eye on the yuan and see what the hell plays out here. This is a massive retrace. You don't see retraces like that. I guess you do, straight out of China. So I mean, every country has their point where they have to intervene in economics, but we did hear that there was a policy decision to tell banks to stop buying as many dollars, and that's why the dollar was appreciating relative to the yuan so rapidly. How do we know rapidly? Look at that giant gap. That is a wild gap to see. And it was putting pressure on the system, and now we had what we had over the last week with regard to basis trades and carry trades and every instability that resulted in 2,000 point swings in NASDAQ. But look, 108 points on the day. Things have stabilized for 5 minutes. It won't remain stable. Volatility is inevitable, just as inevitable as cyclicality, which is why we'll end the stream on the note that we want to see the weekly close below the 200. And then we check back over the next 2 to 4 weeks, and I expect to see more favorable conditions. And the whole story isn't what are we waiting for over the next 2 to 4 weeks. I'm looking at the charts just to understand what's going on, to be comfortable. I'm firmly engaged in rule number 2, know when to stop buying assets. I got more than enough. Between 2022 and 2020, end of 2024, I executed rule number 1. Sure, whoopee-doo, total net worth goes left, down, left, right, AB plus start or whatever that old Nintendo code was. It doesn't matter. Everything is on the right direction now to continue monetization, continue to reinflate what deflates, reinflates at some point, and I look for those conditions. DXY getting stopped out on a retest from the underside of the weekly 200 is one such condition. Hope that helps, ladies and gentlemen. You know the story at this point. Friday, April 11th at 12:23 p.m. I thank you all for joining me. 247 people made it to the end of the stream and are now all that much more rational because of it. It is Friday. Enjoy your weekend. Stay rational. Keep calm. Get into a sauna. Eat some alkaline foods and be healthy. Eat a lot of fiber, dietary fiber. I don't know. That is literally just left field, but I figure I'd throw that in there at the end of the stream. Be healthy. Take care of yourselves. Take care of your family. And I will see you guys and gals later next week. Until then, peace.